One way to avoid paying ABSD, right, is by buying a commercial or industrial unit. How shall we go about doing this? Let's find out. Hi, I'm Ivan.
And I'm Shawn.
And together we're the co-founders of
Quadrant.
Okay, so today we're going to be talking about how can we go about avoiding ABSD. And the key thing about ABSD, right, is actually only for residential properties in Singapore itself.
Yeah, so it doesn't stop you from owning multiple property. Right? It actually just stops you from owning multiple Singapore residential property. So therefore, in this scenario, you are actually able to buy industrial property, commercial property, retail shop lots, some shop houses
full commercial shop houses.
Full commercial shop houses, because some shop houses does come with a residential component, right? All these without ABSD itself. Yeah. So of course, in this scenario, since we are able to buy commercial industrial property, right? I think the number one thing to really understand is also structurally how should we go about it. Yeah.
So I guess the one of the best way of structuring this, right, is to buy these properties under a private limited company. And the whole reason I would say is for tax balancing purposes.
Yeah.
So what do I mean by this? So if you buy a commercial property, right, in our own name, right, we have to pay the taxes, right, based on our personal income tax level, and can go up to as high as more than 20%.
Yeah.
However, if you're buying it in a private limited, right, the company corporate tax rate, right, is at a maximum of 17%.
Yes, exactly, right. So in this scenario, right, if you think about it, because if you buy any random shop house, most of the rentals are like 10 to 15,000 or more, right? If you buy even an industrial property, most are like at 3,000 to 4,000 rental, right? I think the tax rate does go up very quickly if you really combine it with your individual tax income itself. So please, if you want to look at any form of retail commercial industrial I don't care, anything outside the Singapore residential property, right? In that scenario, please go and get some advice to really see how you're going to structure it under a private limited company, because that will really help you in the long run to come.
Yeah. So if you look at it, right, if you're talking about exactly the terms of the tax rate for private limiteds, right, is the first 10,000 is taxed at 4.25%, the next 190,000 is at 8.5%, and anything above the 200,000 is at 17%. So for a rental, right, to be up to the 200,000 mark, right, is actually a pretty big substantial or multiple industrial units.
Exactly. But do take note that, I mean, you think about it, guys, I think if just looking at Singapore residential property alone, it does cost you a lot of headache, right, in terms of decision making on what to buy, right? And that's just Singapore residential property, right? Hey, what should I buy? Should I buy district 19, 20? Should I go for 3 room, 4 room, this condo, that condo? So many permutation to decide. So now, you guys, how do you understand this? Imagine now add in all the industrial property in the gameplay. Wow, which one should I buy? The 60 years leasehold one, the freehold one, the 99 one, the 30 years one, which one should we go for? Higher rent one, lower rent, does it matter? Hey, imagine you put in the whole context of now commercial property. Oh my goodness, should I buy a Shenton Way one? Should I go to the Jurong upcoming CBD area? So you can think about it, guys, the more property asset class you go into, the more permutation there is, and of course that make your decision a lot tougher. Right? So my advice, if you want to look into this commercial property aspect, choose one to focus into first. Be good at it before then exploring the other asset class itself. So I'd rather be an expert in industrial property, really understand what you're buying, what you're doing, right, before even looking at investing in shop houses or retail lots and so on and so forth. So that will, I think that's something to be very prudent about, especially when entering into a property asset class where you're not familiar with.
Yeah, so a quick tip would be that if you're looking for like commercial properties or industrial properties, right, there are actually specialist agents, right, that specialize into a particular segment. Like even if you talk about like shop houses, there are agents that specialize in shop houses, there are agents that specialize in retail shops, and agents that specialize in industrial properties. So when you're buying, right, make sure you choose an agent, right, that is specialized in those trades.
Exactly. And one last tip for you guys is that when you enter into the industrial commercial space, alright, it is actually not uncommon for you to have to pay GST. But do take note, this is also one of the main reasons why we advise to actually buy under a company structure, because you are also able to register GST or make your company GST registered, so that you can actually claim back the GST that you have actually paid. So it doesn't become an expense, but it just becomes a matter of cash flow. Yeah.
On a normal basis, right, a company will need to hit a $1 million revenue, right, before you can register to be a GST registered company to claim back the GST.
Yeah.
But in today's context, right, you can actually do a voluntary registration, right, to be a GST registered company to claim this amount back.
Yeah. So guys, as you can see, there are a lot of hoops and loops to really jump across to, of course, then invest into this asset class. So guys, please get yourself educated before jumping into this particular asset class itself.
So I hope you are learning something from this video. So once again, I'm Ivan.
And I'm Shawn.
And make sure you subscribe to our channel and give us a thumbs up. So we'll see you again soon. Bye.